P10, a private market solution provider trading on the NYSE, says it's, quote, laser focused on middle and lower middle markets. Now, according to its chief executive, this is just one thing setting the firm apart. Luke Sarsfield, P10's chairman and CEO, joins me now in studio with more. Luke, thanks so much for joining.
Thank you so much for having me. It's great to be here.
It's great to have you. And for viewers who might not be as familiar with P10, how would you describe the company's business model and what differentiates it?
So great question. So as you mentioned, we are an alternative asset manager working across a diverse array of private market solutions. So we offer private equity solutions, private credit solutions, and venture capital solutions for a range of limited partners in our funds. And then, as you mentioned, we are laser focused and really focused in the middle and lower middle markets. We think there is differentiated alpha. We think there's incredible returns. We think it's really representative of a broad swath of the U.S. economy that's hard to get access to. And we use data-informed insights to really drive great outcomes for investors in those middle and lower middle market segments.
And I know you've mentioned here that P10 has positioned itself in those particular markets. So what drove that decision?
Well, initially, in many of our foundational businesses, we started focused on those market segments. And it started because, number one, we thought there was a differentiated return profile in the middle and lower middle markets relative to the upper market. Number two, we think there's an enormous opportunity set there. If you look at the middle and lower middle markets, that's where the bulk of commercial enterprise is happening in the United States and around the world, in small and medium-sized enterprises. And so while there clearly everybody knows the big brand names, there's a lot of business activity and capital formation happening in the lower middle markets. And then the third thing we have, because we've been doing this so long, we have a real data advantage. And that data advantage drives our ability to understand and recognize great investing opportunities and then capitalize on behalf of our limited partners.
Growth is always the name of the game, we know, in business. And
Absolutely.
So let's talk about your deal strategy. M&A, is it on the table when it comes to future growth?
Absolutely. M&A is a big part of our growth profile. Obviously, we're really excited about our organic growth opportunities, but we're also really focused on capitalizing on strategic M&A that's going to help drive our franchise, broaden our product offerings, allow us to do more on behalf of our clients, and give us a breadth of investment expertise. And we focus in our M&A profile on things like private credit, on things like real assets, and on things like international exposure that we think are truly additive to our franchise.
You mentioned private credit, so the alternatives universe certainly would cover that, venture, money as well, assets, real assets that is, and lower middle market buyouts. How do these segments differ in your eyes?
Look, I think they are places where if you have a trusted advisor, if you have a trusted fiduciary acting on your behalf as we are, you can generate real alpha. Clearly, there are very stark differences in some of those markets. Somebody seeking access to private credit is probably looking at more of a return profile on a consistent basis. Somebody looking at venture is probably looking for a higher growth return profile, and private equity would fall somewhere in between. So I think it's really important as LPs, as clients of ours think about those markets, that they're really focused, and we work closely with them on understanding what their attributes are, what their investment profile looks like, what they're trying to maximize in terms of their portfolio, their returns, et cetera. And we work with them closely to put together the right set of asset mix so that they can achieve their portfolio investing goals.
And certainly we've seen momentum toward platform models when it comes to the private markets. What is driving that evolution?
Look, that's a great question, and I feel like, unfortunately, given the evolution of private markets, it's just become harder to be kind of a monoline, single strategy focused manager. That isn't to say that some won't exist and some won't do very well, but I think on average, clients are looking to work with managers who can execute for them across the entirety of their portfolio. They're looking to reduce the number of managers they work with, and they want somebody with diversified asset class expertise across the entirety of the private asset spectrum. And so I think increasingly what you're seeing is consolidation happening where many managers who are great managers in a specific asset class want to be part of a broader portfolio. And so they're joining platforms like a P10, for instance. We just executed on a great deal to increase our international exposure with the Qualitas Funds acquisition. And we think that being part of a broader platform enables each of our managers to do more with our limited partners.
We're in the final month of 2025. It's December 2nd.
Yep.
So as we look ahead to 2026, what are some of the questions that you're hearing from investors about the core and lower middle market environment?
Look, I think investors are always focused on, we really are excited about the market opportunity. We're excited about the return profile, but we need to find ways to get access to this market. And so they need a partner like P10 who can really work with them on a customized, bespoke basis to get them access to the markets. They're obviously all grappling with many of the key macro questions as well. Where go interest rates? What does the macro economy look like? How will that impact private market players? How will that impact the underlying portfolio assets that you're holding? And I think right now we feel like we've been in, but we think we're actually going into a very positive macroeconomic environment, particularly as it relates to the lower middle markets. A lot of capital formation, a lot of client activity, a lot of business activity and focus on growth. And we think it's a very, very exciting time to be investing across the middle and lower middle markets.
Luke Sarsfield, P10's chairman and CEO, thanks so much for joining me here at the Stock Exchange.
Thanks so much for having me. Really appreciate it.
Great to have you.
Thank you.